Hello, readers, and welcome to the Deep Dive from Gyeonggaeyeong. Our mission, as always, is to take those crucial front-page stories from the Seoul Economy newspaper and really break them down for you. And today we're looking at four major and I think interconnected stories. We've got a huge U.S.-Korea alliance deal, a massive domestic investment in future cars, some wild swings in the financial markets, and a real breakthrough in biotech.
It's a lot to cover. It's really a snapshot of the country balancing global risks and domestic ambition.
Exactly. So let's start with that geopolitical linchpin. On the 14th, President Lee Jae-myung announced the final U.S.-Korea joint fact sheet. People are calling it the renaissance of the U.S.-Korea alliance. Beyond that, the diplomatic fanfare, what specifically in the military part of this deal makes it such a game changer?
Well, what really stands out to me is how the language is so explicit. It's about elevating South Korea's own strategic capabilities. For instance, the U.S. didn't just reaffirm commitments, they formally approved South Korea proceeding with building a nuclear-powered submarine.
A nuclear-powered sub. That is a massive strategic signal. Why is that specific approval so significant for the region?
It just fundamentally enhances deterrence credibility, especially against North Korea. A nuclear-powered submarine, even if it's conventionally armed, can stay submerged and undetected for far, far longer than a diesel sub.
So it complicates things for any potential aggressor.
It really does. It signals a move toward a true blue water navy. And on top of that, the fact sheet included U.S. government support for expanding ROK's rights on uranium enrichment and reprocessing spent nuclear fuel.
Which is key for energy independence down the line.
Absolutely. For securing the supply chain for that future nuclear fleet.
Okay, but this kind of support doesn't come for free. What were the tangible financial commitments that came with these breakthroughs?
They were significant. South Korea committed to increasing its defense spending to 3.5% in GDP.
3.5%, that's a huge figure.
It is. And it also includes firm agreements to buy about $25 billion in advanced U.S. weapon systems and provide $33 billion in direct support for U.S. Forces Korea.
So this is about showing a real long-term shared burden.
Exactly. It's not just a paper agreement. It's a continuously funded, evolving partnership.
All right, let's switch gears to the economic side of that deal. Trade agreements are always about give and take. What did the ROK secure to protect its key industries?
The main win was definitely on tariffs. Those high tariffs on Korean cars, auto parts, and wood products are going to be lowered to a flat 15%.
Which is vital for staying competitive.
Right. But maybe the most important sort of future-proof agreement was on semiconductors.
Oh.
The ROK secured Most Favored Nation status, MFN. That means the U.S. is basically guaranteeing that South Korea won't be treated worse than any other trade partner in future deals.
That's critical. It removes a layer of uncertainty in the most sensitive tech sector. And what about the big political issue? Agriculture.
That was handled very carefully. Sensitive goods like rice and beef were specifically not included in any new market opening demands, which was a huge political relief at home.
And the GIF.
The U.S. secured the elimination of the old import cap, the one on U.S. standard-compliant automobiles. So that market is now fully open for American car exports.
Okay, so we've got this foundation of strategic stability. Now let's connect that to domestic ambition. KIA just announced a massive $4 trillion investment in its Hwaseong EVO plant.
It's a huge number.
It's all to create a hub for something called purpose-built vehicles, or PBVs. For anyone who isn't familiar, what exactly is a PBV?
A PBV is basically a vehicle designed from the ground up for a specific commercial job. Think modular electric delivery vans, autonomous shuttles, mobile shops. They aren't just adapted passenger cars.
They're the backbone of future logistics, then.
That's the idea. And KIA's $4 trillion bet is a sign they think the traditional car market is flattening, while this specialized utility market is about to just explode.
So they're trying to get ahead of the curve?
A preemptive strike to dominate a whole new category.
The growth forecast must be pretty incredible to justify that kind of risk. What's the market size they're anticipating here?
The projections explain the urgency. Hyundai Motor Group estimates the global PBV market is going to leap from about 1.3 million units now to 20 million units by 2030.
20 million? That's an incredible jump in less than a decade.
It is. And the EVO plant is designed to hit an annual production capacity of 250,000 units to meet that demand.
250,000 units? That sounds very aggressive for a new kind of vehicle. What's the advantage of creating a whole dedicated plant for this?
That's the strategic part. A dedicated facility lets them maximize the modularity and flexibility that's, key to PDVs. They're splitting the production.
How so?
The EVO plant East is already handling the smaller PV5 models, cargo vans, wheelchair-accessible vehicles, aiming for 100,000 units a year. Then the EVO plant West, that's coming in 2027, will handle the bigger PV7 and PV9 models and add the other 150,000 units.
So they can scale up fast.
Very fast. And crucially, KIA plans to export 71% of that production by 2030, making Hwaseong a global manufacturing base.
All right, from future mobility to immediate instability. Let's talk about the financial markets. The $1 exchange rate was on an absolute roller coaster on the 14th. It swung nearly 23-1 in one day.
It was a wild session.
What caused that kind of volatility?
The initial push was external. A pretty sharp drop in the New York stock market created this global risk-off mood. The $1 rate just spiked, touching 1474.91.
And to give that some context, that's really close to the crisis highs we saw earlier this year.
Exactly. It was signaling a serious loss of confidence.
And that's when the authorities stepped in. We saw Vice Prime Minister Guyonne Guelleh issue a verbal intervention. But we hear officials talk all the time. Why did this one statement cause such a dramatic reversal?
That's the key question, isn't it? Was it just talk?
Right.
He stated that authorities would actively utilize available means to stabilize the rate, but market dealers? Well, they widely suspect that this verbal threat was immediately backed by actual action.
You mean a direct intervention? A smoothing operation?
Precisely. A smoothing operation is when authorities, like the central bank, just directly sell huge amounts of their dollar reserves on the open market.
Pushing the dollar's value down.
By increasing the supply of dollars, yes. And the evidence is pretty compelling. The rate plummeted, even though foreign investors were massive net sellers in the stock market that day, over $2 trillion worth. Without an intervention, the rate should have kept climbing.
That makes sense. And linking back to our first topic, the geopolitical news happened later in the day too, right?
It absolutely did. The uncertainty really started to fade once the details of that U.S.-Korea fact sheet got out.
I see.
That document actually included a specific clause committing to foreign exchange market stability measures between the two countries. That institutional reassurance, plus the intervention, is what brought the won back down to close at 1457.
Incredible. Okay, finally, let's look at biotech. ABL Bio just secured a huge strategic investment from the pharmaceutical giant Eli Lilly. What makes this deal so historic for the Korean bio industry?
The sequence of events is what's really important here. Just 2 days before this, ABL Bio had already announced a massive $2.6 billion technology transfer deal with Lilly for its GravID-B platform.
So that was a huge win on its own, a traditional licensing deal.
Right. But then came the second part. Lilly followed up that deal with a $22 billion strategic equity investment, an SI.
And why is that so unusual?
Because it's the first time a global big pharma company has come in as a strategic investor in a Korean bio firm after a major tech transfer deal like that.
So it's not just a customer licensing a technology.
It's a co-owner, a partner sharing the risk and the long-term vision. It's a massive validation of ABL Bio's core technology on a global scale.
That validation is everything. So with this new influx of cash, where will ABL Bio focus its R&D now that it has Lilly as a partner?
The focus is very strategic. It's on next-generation treatments. They'll obviously advance the GravID platform, but a lot of the investment is going into developing sophisticated antibody-drug conjugate, or ADC technology.
Which is one of the hottest areas in cancer research right now.
It is. And having Lilly invested in their equity and their R&D pipeline just opens the door for much faster collaborative drug development. It's a huge vote of confidence.
So today we've covered the U.S.-Korea fact sheet, that massive PBV investment, the chaotic currency trends, and the landmark ABL Bio deal. And if the theme here is strategic balancing, maybe the question to think about is this. How much does that institutional stability, something like the U.S.-Korea fact sheet, actually empower a company like KIA to take a $4 trillion risk on the future? It's a fascinating circle of influence. We will return next time with quick news. Until then, this has been Gyang Jae-young from the Seoul Economy newspaper. Thank you.